Throughout history, nations have started with their currencies backed by physical gold and silver. As these nations expanded their reach, have gone to war, and have conquered foreign lands, they have debased their currencies. Every time, the population has lost their confidence in the economy, and they turn their investments and faith to physical assets, especially gold and silver. And as the cycle of demand for precious metals increases, the prices have risen. In today's world, it does not appear to be any different. The confidence in our economy continues to erode, as issues like barely averting the fiscal cliff overwhelm the population. And as the federal debt ceiling battle looms, the economy will stay on the front page of fears and worries for the people. And then what? Default on the debt? Reshaping the across-the-board spending cuts in effect March 1st? A war over passing funding the federal government? How concerned are you? Here's the deal. The world works for the U.S. Foreign countries manufacture the products we purchase and then accept our paper currency, dollars. With the dollars, they purchase U.S. Treasury bills with the hope that they will continue to hold value. This has been an excellent deal for the United States, but an enormous global imbalance has been created. One axiom that applies here is that anything that has to change will change. We just don't know how, when, or what that change will be. But will you be prepared for a change? Let's take a look at some of the causes for change. Today, all developed countries are having serious economic problems. A lack of economic discipline, which we typically say is kicking the can down the road for future generations to have to deal with the problems. The average age of the population is increasing, meaning there are more citizens retiring and producing less, requiring more medical costs. Administrations are attempting to resolve issues with band-aids and deceit. Let us look at the demographic issue regarding Social Security. In 1950, there were 7.1 workers for each retiree. In 2010, there were 4.5 workers for each retired person. And in 2030, there are expected to be 2.37 workers for each retiree. And the birth rates are dropping. The United States, India, and Mexico are barely holding the population rate at even. But in Europe, Japan, and Germany, the birth rate is shrinking the population. The fact is that there are less children to become workers and more people who are living older and are retiring. What are the issues with living longer and retiring? The older population is not so concerned with buying the latest and greatest gizmo. They are happy with what they have, and in many ways, less is more fulfilling. There is pride in using and caring for things for a much longer period of time. Their experience causes a frustration with the current state of the economy. There is much less need to compete with others. There is a focus on more important things in life besides material items. So what is the solution? There are 3 choices. 1, to cut spending. 2, to raise revenue. 3, to print more paper currency. But what happens when other countries refuse to accept United States paper currency? What happens when Social Security goes broke? What happens when the inevitable economic crisis arrives? Will you be prepared? Investing in physical gold and silver has historically proven to be a solution. If you would like to discuss this or contact us for more information, we can be reached at 888-609-1130 or come to our website at universalbullion.com, www.universalbullion.com.